Okay, what I'm about to try to do real quick is explain calls and puts in the simplest way I can, but this is not explaining it for people who actually invest. This is just explaining it for people who's trying to get quick money. All right. So we got that out the way. Let me just find a one that I already know that's the calls and puts are usually cheap. Let's say GoPro. Well, no, because GoPro just went through that stuff. So let's say Fitbit. Let's see if they're cheap real quick. First, let's deal with a call. Even though this tells you right now, it says basically the call is the green arrow and it says buy a call, where it says it gives you the chance to buy 100 shares of the stock at the strike price. By the expiration date, you'll profit if the stock goes up, you'll lose money if the stock goes down. That's the basis of what a call is. A call is you saying that you think that the stock is going to go up, so you're buying a call. But now let's get into it for if you're not investing, if you're just trying to get money. All right. We see the price right now, the share price is $6.62. We see that $7 call is the break even says 702, and it's only 2 cents to buy, which is $2. Because like I said before, you're getting 100 shares of it. So I could pay $2 for this, and if the stock goes up, what, 40 cent? 40 cent, then that means that, well, no, that's done if you're gonna invest. All right, so if that stock goes up 40 cent with that, uh, this isn't showing the delta and all that where you can see the pricing and everything. But basically, if you buy that for $2 and the stock goes up to $7.02 and you bought that for $2, you're gonna profit. That $2 just turned into, let's kind of cut it in the thirds, maybe. We're not gonna cut it in half and say that you made $20. So now that $2 is $22, because I can't say because I don't know the delta and everything. But let's say, what was I at? $22. Let's say, so that's half. $22 is half of the 40 cent, which would be $40. So let's say, I'm sorry, I'm messing up. Let me get back. All right. So if it goes up 40 cent, you paid $2 for it. We're not gonna say that, oh, now your $2 turned into $42. Let's say for hypothetical terms, that $2 just turned into $14. Now, after that, now it would be every penny. So after that $14, if the stock went up to, let's say, $7.12, your $2 is now $24. Now, the stock kept going up and going up. Basically every penny would be more. So I hope you understand that. Now let's go into a put. In simple terms, all right. What we would do, because we're being cheap, we're the budget here. All right, the share price is 662. We would buy the $3 put. So what that basically means is we would pay $3, and if the stock drops, what? That's not even 20 cents. What's that? Y'all messing up my quick mouth. What's that? 15 cents? Is that right? I don't know, but if it ain't, you know what I mean. So if it drops down to that, that's kind of better actually. But let's say it goes down to 647, and you paid $3. Your $3 now maybe is $8. Maybe $8 now. Your $3 just turned to $8. Now if that stock drops to $6.30, you're looking good, because the more it drops, the more money you're gonna make per penny. So that's another thing when people say that oh, you only can make money in the stock market if people get all crazy about it, about, oh, well, this stock is losing money, you're not gonna make money, it'd be bad time to put your money in. No, you can make money if stocks go down. That's what buying a put is. You're saying that this stock is going to go down. Let's see what this is saying. Hold on, let's see what this is. See, It gives you the right to sell 100 shares. So this is another way how you can explain. Like, let's say if you owned 100 shares of it, this is basically like how I seen a video where they said it's basically like buying insurance. So let's say you had this and then it dropped, but we're not going into that because we're not investing. So I'm not going to confuse you with all that because we're not doing investments. We're doing it just for profit. So if this stock, like I just said, we're buying a put, which means that the stock is going to go down, which you see right there at the break-even price. It says 647, and right now the share price is at 662. So we pay that $3, and we hope that that stock drops as much as it can. So if that stock drops to, let's say, $6, that's almost like $50 maybe. I ain't do the correct math, so don't quote me all the way, but that's almost $50. That $3 just turned to almost $50 from that stock dropping. So I mean, this is just my quick explanation of it. I hope you understand what I'm saying. I will review this video to see if it kind of makes sense, because I know I went off a little bit, but I think that it kind of makes sense to me, but I already know what it is. So, I mean, to you, it might be different. So, if you have questions, ask me. That's what I'm here for. I'm trying to build a community of other people who are on budgets for stock market. Because I'm tired of all these people saying, oh, you got to have this much money to get into stocks. Oh, if you only got $50 in your account, you might as well just throw that money away and buy something else. No. You can make money. That's why my profile picture is a picture of $7, because I turned that $7 into more money. And I actually make a video of just my price lists of money, of where my money went from and where it came to. I currently have a call option on another account where it only had $1 in the account, and I found the contract for $1, so, and it already went up to $3. So let's see what that dollar turns into later on. But anyway, this video's over. I'm sorry, I'm rambling. And also to add, now with like how we just was talking about with the put. All right, now let's say if the stock goes up, only money you're gonna lose is this $3. That's the only thing you're gonna lose. You don't have to worry about nothing else. Just like with the call. If we did the call, you're only gonna lose $2. So whatever you pay for something, that's the most you're gonna lose of it. So I hope that makes sense too to you, which is kind of even better than buying 100 shares or something, because if it drops, you're gonna lose every penny it drops. You're gonna lose $1. So with this, your max loss could only be $2, and then with the put, your max loss will only be $3. Hope that makes sense. If not, let me know.